Get your free copy of the complete tutorial at www.teachucomp.com/free.
Although you do not have to be fluent in accounting terminology to understand QuickBooks, it is necessary to have a basic understanding of some accounting concepts before entering information into the program. The first concept to discuss is the chart of accounts. A chart of accounts is a listing of all the accounts used within your company file. You can open the chart of accounts by selecting Lists, Chart of Accounts from the menu bar. Your chart of accounts shows the names of the accounts used by your company, the account type like income, bank, or one of the many other account types, and the current balance of the account. There is a column called Attach, which shows any attached documents associated with the account. You can double-click this column to open a dialog box that lets you attach documents from your computer, from a scanner, or from the Doc Center for free. These attached files are stored locally on your computer in QuickBooks. You will now examine the general account types found within the chart of accounts and how they are organized. The chart of accounts has a default sorting method. Assets are listed at the top, followed by liabilities, and then equity. These accounts are also shown in the balance sheet report for your company. Following those accounts, within the chart of accounts window are the income accounts, followed by the expense accounts. These accounts appear within the profit and loss report. At the bottom of the chart of accounts are accounts for non-posting transactions, like purchase orders and estimates. As mentioned before, at the top of the chart of accounts window, you will see the balance sheet accounts which appear on the balance sheet for your company file. These accounts show what you own, your assets, what you owe, your liabilities, and the difference, or equity. Below those accounts, you will find the income and expense accounts, which track where money comes from and what it is spent on, respectively. Each balance sheet account has a register associated with it. Unlike balance sheet accounts, the income and expense accounts each have a report that lists the transactions associated with the account. We will look at these types of accounts in more detail in later chapters, but let's review a general list of the different types of accounts shown within the chart of accounts and whether they appear in the balance sheet or the profit and loss statement within QuickBooks. So first you have your balance sheet accounts. These include all of your assets. Assets are what you own and what other people owe to you. More specifically, the money that people owe to you is called your accounts receivable. Other assets may include checking account money, inventory, fixed assets like computers, and undeposited funds from customers. Also note that when you set up your company file in QuickBooks, although checking, savings, and petty cash are all company assets, you will set them up as bank-type accounts in QuickBooks. The available types of accounts that are assets are bank, accounts receivable, fixed asset, other current asset, and other asset. Liabilities are what you owe to others. The unpaid bills that you have are specifically referred to as your accounts payable. A liability could be a loan, an unpaid bill, or taxes owed. Also note that when you set up your company file in QuickBooks, although credit cards are company liabilities, you'll set them up as credit card account types for ease of use in QuickBooks. The available types of accounts that are liabilities are credit card, accounts payable, other current liability, and long-term liability. Equity is the difference between what you have, all of your assets, and what you owe, all of your liabilities. The basic formula for calculating equity is assets minus liabilities equals equity. Equity is seen as representing the health of your business. Equity can come from three different sources: investor money, current year profits, or retained earnings, which are profits from past years that haven't been distributed to shareholders. The only available type of account for equity is the equity account type. Let's then look at the profit and loss statement accounts, or the income statement accounts as they are also often called. First, you have income accounts. Income accounts are used to track the income generated by your company. Following that, you have expense accounts. Expense accounts are used to track where your company's money was spent.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.